Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good to have you back on.
Thank you for having me today.
Well, we just heard all about the Fed's new policy, more focused on supporting employment and less so on reining in inflation. What do you make of this move by the Fed? Tell us about that.
Yes, definitely this news is positive for the equity market. If you look at on Thursday, the Dow Jones climbed 161 points or 0.6%, and S&P 500 also gained about 0.2%. The contrast, though, Nasdaq slightly lost about 0.3%. The S&P 500 booked a record number again, and Dow Jones briefly turned positive on Thursday as the investors digested the U.S. Federal Reserve's new strategy to adopt a flexible form of average inflation targeting and boosting the employment. On the macro side, the number of American filing for unemployment benefits totaled about 1.006 million last week, while second quarter GDP was actually slightly revised up to minus 31.7% from previous 32.5%, still marking the largest quarterly plunge ever. It seems that the futures market is continuing to show somewhat of a rise on Thursday afternoon as the Wall Street tries to extend its record-setting run as the Fed Chairman Jerome Powell announced a significant policy change, which is quite a bit of a change that we haven't seen before, where the central bank will allow inflation to run above the target of 2% to support the labor market and economic growth rate picking up in the future. Investors will continue to watch out for the economic data coming out from the U.S., but overall, we think that the consumer spending and personal consumption's expenditure should be in the right track, and that the policy measures will be continued to be supportive for the consumption as well as the equity market.
Well, investors here in Korea seem to welcome that news. The Kospi back up, also with the government extending its ban on short selling for another 6 months. Tell us about the trade today in Seoul.
Yes, as you said, this news of U.S. Reserve Chairman Jerome Powell talking about the monetary policy strategy change has allowed the Korean equity market to do better today. Kospi was up about 0.4%, and Kosdaq was up 0.6%. However, in terms of the COVID-19 incident, it is showing the highest number on a daily basis since March. And this type of uncertainty does put some pressures on domestic consumption as the stages for the closing the mom and pop shop or restaurants will be quite a bit of significant factors for the consumption. But even though this kind of negative news, we saw equity market rising because from the U.S. positive news, but also South Korea's financial regulator have said that they have decided to extend a temporary ban of the short selling for stocks for another 6 months, which means that until March 15th of next year. When we look into the future economic growth rate, the first quarter of next year would look very good on a Y number, year-on-year number, because we had seen a crash of the growth rate in the first quarter, which means that for a longer-term basis, Korean equity market has more room to go up in the future. So therefore, we should continue to focus on the Korea's equity market for the next about 3 months or so.
Well, now we're almost out of time, but one last statistic we see today that Korea's tax revenues and contributions to social security programs compared to GDP rose last year for the first time to above 27%. Last year, of course, was before the pandemic. So tell us about that and what stands out to you.
Yes, the Korea's tax to gross domestic product ratio reached nearly 27% in 2018, but was lower than that of other countries. So this number is significant that it is showing a faster speed, but nevertheless, in terms of tax to GDP ratios for international comparison, if you look at 2018, the OECD average was about 34.2%, and 2016 it was 34%, whereas the Korea's number is around 25 to 26%. It is rising, which is putting somewhat pressure for the domestic consumption pickup, but nevertheless, we think that this trend is probably here to stay in the future.
Got it. All right, Mr. Yu, thanks so much for coming on. We appreciate it.
Thank you very much.